Dhiraj, thanks for joining us. Take us to the earnings this time and how the quarter was for you.
Thank you for having me, Aabha. This quarter was a tough quarter for the broking industry, so do for us also. But overall, last year, we did very well. We did a net profit after taxes of 984 crores, and that was a 40% growth over the last year. And in the last year, we had almost 70% growth in our profit after taxes. So last 2 years have been phenomenal for HDFC Securities.
So, what are the challenges you're facing, Dhiraj? You mentioned it's been a little tough. So, where are you finding the roadblocks?
So, Abha, in the last quarter, we've seen the volumes coming down and the participation and the activity in the stock market was somewhat subdued. We have all seen that there has been a significant correction in the market, and that's where people are retail investors are also taking a pause, and they are looking forward to see that how they realign their portfolio, whether they should take their fresh positions or not at these junctures. So we've seen some inactivity at that level. Some of the money also have moved to the initial public offers also, so that way there was a lesser secondary market activity. So that was the reason. Otherwise, structurally, we are seeing great increase in the retail participation in the market. You've seen that how in the last 2 years we have seen significant new client addition, and we could able to counter even the large FPI outflows through the domestic flows as well.
Do you see that scenario continuing given the kind of shakiness we're seeing in the markets currently?
I think this would be a litmus test for the retail participation this time, because in last 2 years, post March 2020, when we had a significant correction in the market, and after that, we've seen a unilateral run in the market. We've seen the good amount of retail participation, high net worth individuals coming forward and investing in the stock market, and they have seen good, increase in the portfolio values. But this is a real litmus test, and I do believe that there'll be some shakeout. There'll be some people will get to the reality, and there'll be a reality check for many of these new investors. We have to see that how they navigate it. So far, SIP inflows are holding on. I think that's very much positive. New client addition is still quite positive, and we have seen also in LIC IPO the employee portion or the policyholder sides getting significantly oversubscribed. So that shows very clearly that there is still lots of interest in the markets. But with increasing interest rates, I think some kind of a capital allocation going to the fixed income and even in the commodity side, particularly gold side, is inevitable. So that way we would see some check in the equity market activity.
Interesting. So, just while we have you, I mean, got to get a sense also in terms of what is the biggest pull you feel for a retail investor coming to uh, a known platform like yours versus some of the other online platforms that they have today. What would you say is attractive to them? Is it the credibility? Is it the offering? And how do you expect that behavior pattern to evolve?
See, Abba, we are unlike many other tech-led brokerage houses. We are a very different brokerage house. One, that we are a full-service brokerage house. We largely focus on a mid-term to long-term investors and do not encourage speculative activities, be intraday trading and even derivatives also. So we get a lot of investors who are here to create wealth in the mid to long term. So where we stand out completely apart from the trust and digital platform, which are at par with any other player in the market, or even better than some of them. So where do we stand out is our active engagement with our customers. We have a large team of about 2,000 resources who continuously actively engage with our customers. And also we have a full-fledged retail and institutional research covering more than 300 stocks, and it's a very detailed coverage, and we keep coming out with the recommendations for our investors. So that way they get curated ideas, they get good recommendations, and we help them to create their wealth in the midterm and short term. And actually, that's how we stand out completely versus the only platform-led brokerage houses.
So that leads me to my next question in that what would be a corpus that you feel someone should start out with? Is there a minimum? And secondly, what would you be recommending right now, if not a specific stock, but themes or, whether it's, a certain part of the market, anything that you'd like to suggest is probably what's looking more attractive to you and your team at HDFC Securities.
So at this juncture, the markets have corrected reasonably well. Valuations are looking attractive. We've seen some time and price correction both. So if someone is having liquidity available with them, they can start with 25% of their investment into the markets immediately. And in over next 6 to 9 months time, they can invest in a staggered fashion, remaining 75%. And if they are getting regular inflows, nothing better than doing SIPs either through a mutual fund route or in the stocks also. Coming back to the specific recommendations, my suggestion is that go for a very high quality companies to start with. In every single industry, there are industry leaders, there are performers, and there are companies that have been having a track record for decades. And I suggest that investors should go for these set of companies. So industry leaders, companies that are having a good track record, and in the sectors, we do believe that IT has some kind of they've corrected significantly. They are in the oversold category. So we are bullish on IT as a sector. Banking and financial services, particularly private sector banks, also we've seen a significant correction. We do believe that as the market will revive post pandemic, we will witness a significant upside in the banking stocks also. And in the increasing interest rate cycles, banks do get to increase their margin, they gain margin. So that's how, we believe that the banking sector can be a good sector, IT can be a good sector. Discretionary sector is where we feel there'll be challenges, because that we all are battling with an unprecedented inflation. And, we have now pressure both from supply side as well as demand side as well.
So do you see a pressure on earnings as well going forward, Dhiraj, or given the kind of, context you mentioned, and with some movement to fixed income, like you said, I mean, how are you expecting things to play out?
See, the earning growth, we are expecting Nifty companies to grow at 20%. So we will see a steady growth in the earning, though in the last quarter, we've seen that sales were higher quarter on quarter basis. But there was some pressure on the margins. The pressure on margins will continue for next 2 to 3 quarters for most of the industries because of the high inflation. But we at the same time, we are seeing a robust demand, and that can be adequately compensated by the volume growth. So that way, I do believe that this year we will see a high teens of earning growths in the Nifty companies.
Okay, and I meant also for earnings at HDFC Securities. Any kind of outlook that you have right now, or anything that you're accounting for given the current backdrop?
See, for HDFC Securities, this year will not be a very easy year actually, because the markets are very volatile and there'll be a limited activity in the market. This is a year of a consolidation in the stock market. So we do believe that there'll be some kind of an impact on the earning growth. We will not be able to grow at the same compounded annual growth rate that we are growing for last 5 years. We've been growing at 30%. As I mentioned that last year, 40%, and a year before was 70% growth. So we are looking at a good 20-25% kind of a earning growth in HDFC Securities in this year as well.
All right, Dhiraj. Thanks so much for joining us and taking us through the numbers. Thank you.
Thank you, Aabha. Thank you.
If you like the video, do like, comment, share, and subscribe.